Hi everyone. I'm just doing this video up. I'm going to try and follow up and do a series each week. So what I put out is a weekly video roundup of the trades of the previous week each week, and that creates a database moving forward, and I send it out to my clients for the first 4 weeks after they've done the course to help them on their way. So this first video in this series is just a quick look at the code that I'm using in the background to it, and what I've got set and what haven't got set. So this is what gets marked automatically on my charts, what you see on here. The only thing that I have switched off is the actual formation I'm using to assess this trade on, for obvious privacy reasons. But the levels I've left on, the stop loss level is there. The filter I'm using, I'm not naming what that filter is, but you can see as we work through, if you can work it out, fine. It's good. But you'll see how I use that to determine whether I take trades directional, reverse, or no trades. This is what I do each week to publish the results on my website. So for those of you that say, oh yeah, that's garbage, well, if you watch this long enough, you'll realize actually this guy is doing that, and that is exactly what I do, what I teach my students to do. Alright, so let's come through and have a look at that. Okay, so this is what is on the chart. Winning PT3 is 1.8. That's the triangle it draws to the target. If a target's met, that triangle stays on the chart. If it's not met and stopped out, it doesn't. Stop loss level, tolerance. My levels, the standard formation that gets marked, I allow 10% extra than what that formation is. Ignoring these filters through here. So this is box color up and box color down. So this is what I've got switched off. When that's activated, it shows a different color box formation around the specific formation that I'm using. So I've got that switched off. Text size, which is the size of the stop loss label. We come to the level lines showing. So on this setting 8, that means the levels come across 8 bars. So if we just have a look here, so that comes across 1, 2, 3, 4, 5, 6, 7, 8. That's what that does. I can make it 4, 8, because I use 8 as a guideline on the formation that I'm doing. And again, there's the text size and the color. So I have 3 different color codes that I use: red, white, and green. So just on this particular trade here, so the trade is facing the direction of where you have got the 2 white levels. The first white level is the entry point of the trade. This second level is where the stop for a reverse trade is. This red level is a warning level, which when it gets to there is the first time you can move a stop up on a directional trade. So you've taken this trade directional. That's the warning level that is close to target, you can stop. That there is the target on a normal 1.8 times what my formation size is. So it's almost a 2 to 1. The next level here is when I have a 50% extension, which goes up to close to 3 to 1, or about 2.7. On the opposite side of the scale is where the stop loss level is. This level here is the first level for a reverse trade, and this is the ultimate level on a reverse trade, which is 2.5 times the formation that I use. Right, so that's what we come down. In the code, minimum formation size, maximum formation size, session windows, so I can have 3 particular sessions that I trade in each day categorized. On this particular chart, on the pound AUD, I'm starting at the 2 o'clock bar. This is IG time, so that's basically midday on a Monday. Tuesday, I'm starting at the 0 bar, which is 10 o'clock, finishing at 13:30, which is 11:30. Same thing Wednesday, same thing Thursday, and if you've watched anything I've done, I do not trade on a Friday. And down in here we have this one here, extension rule, where I can extend a trade by 50%, 100% is marked automatically on the chart. See that asterisk there? That denotes a 50% extension if I'm in a trade in that direction. That's what it marks. If there's a double one of those, it's a 100% extension. Weeks on and weeks off, I always like to see where the start of the week is, and that's fine. And then notifications, what sends the alert to your screen and mobile. Okay, so let's just come through and now have a look through some weeks, and we'll go back to the start of March, data week in March, which is the first week of the month. Okay, so we're in data week here in March, what I call data week by the calendar that I use, which is the first week of the month. So in this trading, is what I'm looking at, a trade has to start down here or in the purple zone to be a long trade, right? And up here in the orange zone to be a short trade. So hence the color I mark on my formations, if it's a short trade, so this trade that's been popped up in here is actually colored orange when you highlight it on the code, and the other trades that are long are in the purple color here that go long. So if it's a purple box, it has to be in here, right, to go long directional. If it's an orange box, it has to be up there. If you get a purple box up in here, they are the 100% reverse trades where I take a reverse trade. So let's just come through and work my way through. So as I said, these levels, the minute the technically correct formation is marked on the chart, sends alert to the screen, and it marks the levels plus the formation, and initially it marks a box on there. So I come to this here, and I've just put this on here. This doesn't get marked here. I've just put that on. So that's the start of our trade there, right? And we have a look here. It's in no man's land, right? That's classed as a no trade. Now, pretty much everybody here is going to be piling in short. Where that is there, it's a no trade. We come through to the following night, and in here we've got a long trade. It's going that way, two white and stop loss labels there. We look at that and it's in the wrong. So that's actually a purple colored formation, which means it should start here. It's up here. Again, that's a no trade. It's a false breakout. Right? That's what's happening there. Again, everyone's watching this moving up here. It takes off here. Everyone gets in and they're all stopped out. So that's two no trades where pretty much all of you guys watching would have already been stopped out. And that's the only opportunities I get there in that particular week for that pair there. We come through to here, which is what I call week one. Stretch that out, and I'll put my little on here. So we're going in this direction here, right? And we have a look, and again, by the filter down here, it's the wrong way around. The market's moving up, right? And that's stalled. It's pretty much, that's with that stalled and coming, that's a reverse trade there. A reverse trade, my entry signal was on that bar where that first white bar starts. I need to get in a reverse trade right at the very top of that bar there. I've missed that, so I've missed that particular trade there. We then get the next trade here, which is a trade that's going this way, directional, and this is the first one now. We're up in the orange zone to go short. There's our trade, our target's marked on there, and there's our 1.8 to 1. Now, as I said, that red level there, that's where if you're watching, you can move your stop to entry once it hits that level. It's pretty much there. There are trades that miss out on there, right? And that goes to its target. In here, the next trade opportunity, I don't take that one because I'm still in this one here, and by the filter down here, it says not to take it anyway. So we come through to following week, and we've got a trade upwards. Again, it's a false break, right? The market is full of false breaks. And up to the top. Again, it's going long, so that would have been a purple formation in there where that formation is. It's not done, it's down there, it's up here, it's a reverse trade. So this is the first one we get a chance to take a reverse trade. So we've reversed on this level here. This is the stop loss level for reverse trade. My stop loss level is there, it's fixed. Right, my target for my reverse trade is half at 1.5 sections, the balance at 2.5 sections. Right, so we've entered the trade, there's the stop loss. And I'll mark the stop loss on there for you. And we come down, and there's the 1.5 target of my formation roughly, and there, marked automatically. So that's the profit on that particular trade there. So if we have a look at that there, if we split that in half, so we've got 63 points and we risked 23. So it's pretty close on average to a 3-to-1 trade. That's a reverse trade. Again, these reverse trades where everyone, I'm sure most of you watching will look at that and say, I'm going long, I'm going long. Of course you're going long. That's what the market's set up to make you think. That's why trading is difficult when you don't have something like this and the filter to tell you where you are. So we come through, stop label, 2 whites, that means it's a directional trade. That way we're looking at, again, that where that touches there is my entry. Again, we're looking at, it's 100% wrong. It's a false breakout. It's a reverse trade. So here's our target levels again. Let's do the same process. We've entered, probably got a little bit better entry possibly in there. So that means our stop loss goes up that little bit extra. Our initial target comes in there, and our secondary target kicks in there. So that's a nice reverse trade. And again, this is where all of you guys get stopped out. You watch, it's going up, it's going up. No, it's not. It's all deliberately manufactured. So just in this 10 or 15 minutes, it makes you understand why I work on a different level to everybody else and what goes on in the market. All these false breakouts are designed to fool 80 to 90% of the people. Right, that's what happens and that's what goes on. So now we come through to situation. So we've got our stop and 2 white, means it's a short direction trade here. And that's the entry point of our trade there. Where are we? It's a short trade. It should be taken up here. So it's perfectly 100% wrong again. So it's another false breakout at the end of the run. All right, so somewhere in here, again, we've got a really good entry. It's bottoming and starting to move up. So we've gained a little bit there. We'll move our stop down to there. And our target levels come in exactly the same proportion. So they work on a sliding scale. And there it is. And that's what you expect from the targets there. Of course, this trade that's thrown up in here is meaningless because we're already within a trade. So that's just, March, the trades in March, how they flow using that. That's just on the pound AUD. Each week I'll have a look. Next week I'll do one up on the pound yen. It hasn't had much life in it of late. Euro yen is another one I watch as well. But guys, so this is all, as I say, this here, when the technically correct formation is marked, that gets marked on the chart automatically. I don't mark that on there. I don't know when it's coming. I don't sit and watch the charts. When that gets marked, as an alert goes to the screen and an alert goes to my mobile, I then have a look and see where I want to go from there. All right, guys, take care, and we'll talk to you next week.